All right, what's up, guys? Good morning. Happy Monday, the 8th of December. I'm doing the weekly watch list, and the big to do will, of course, be Jerome, JP, and the boys on Wednesday. Now, I'm not going to be there waiting with, fainted breath or anything. Going to keep the focus on the price action, the indicators, the rankings, all the things that matter. But we, of course, got to get through that. So, looking at the rankings, and I think we're doing a webinar on the ranking system here maybe next week. But all right, diving in here, taking a peek, and overall, if we take the indices, the Big Ten, and the sectors, we're in a bullish market. So market equals bullish, and for a little context here, it is a general statement. The entire month of November had a rating of neutral. So we go from neutral back to bullish, and breaking that down, the indices have a group ranking of 86%. First place would be the Dow Jones, followed by the S&Ps, RSP, the QQQ, and the IWM. And then for the Big Ten basket, they have a group score of 40%. And frankly, when I think about the strongest and best markets, that basket will usually be a little bit stronger. And then breaking that down, the bad would be, Netflix. Netflix has a negative 69. Although, if anything, maybe a little support there at that $100 level. And then Microsoft is a bit neutral, Amazon and Nvidia a little neutral. The good in the hood would be, of course, your Broadcom, Google, Tesla, TSM, and the Apple. We'll take a look at a few of those. But for the Big Ten basket, they have a group ranking of 40%, and then for the sectors here, take all that and combine it, and they've got a group ranking of 47% of their best score. And the bad would be what? The bad would be the XLP, real estate utilities, and Bitcoin down here in last place. The neutral would be, materials, healthcare, and the good would be silver, communications, the XLY basket, the SMH, energy, healthcare, energy, financials, big tech, industrials, and gold. If anything, more good than bad. But yeah, so my point of view, guys, until things change here, and if things don't change here, take that, combine that with a lot of big squeezes and a lot of key names. If we can get through the Fed without any disasters, I think a market potentially trying to go back to the previous highs. Maybe into to a brand new all-time high. So the combination of good rankings and big squeezes, that can make for a lot of good action. So for the QQQ futures, they currently have a 3-day squeeze, a 2-day squeeze, a 4-hour, a 2-hour, a 1-hour, a 30, and a 15. And if we anchor to a daily time frame, till things change, the indicator would like it for a lot higher. Good structure behind it. We got the that fresh MACD shift. Your squeeze breaks long. Good trend with the perfect score of 15. Nasdaq futures looking pretty sharp here, and then for the S&P futures, not to be outdone, they have a squeeze on the 3-day, the 2-day, the 4-hour, 2-hour, 1-hour, 30-minute, and 15-minute time frame. And then anchoring to the daily 15 points. Good structure. All the pretty colors in all the right places. But, here's the thing. Everything I like about that chart, they're going to keep it down to about your 21 EMA around, call it 6,800. Meaning, hey, we could get through Fed, things get, a little bit frisky out there. We could pull back a quick, call it 1% and change. I don't think it would change too much. All right, and what about the cash indexes? What about cash QQQ? The Q-tip, as some folks would call it. Daily on the QQQ, perfect 15 with a squeeze on your 5-minute, 15-minute, 1-hour, 2-hour, 2-day, and the 3-day squeeze. And of course, when it comes to a bigger time frame, a 4-hour, a daily, a 2-day, a 3-day. If the conversation is, hey, can we get back to an all-time high? If they do fire long, should not be too much to ask for there. And then a quick peek at the S&P futures, and we'll go through the cash S&Ps. I'm going to go through a few of the key names. And for the SPX, squeezing on the 3-day time frame, the 2-day, the 2-hour, 1-hour, 15, and the 5. And then looking down here, we have the slingshot signals on the 3-day squeeze. And then anchoring to a daily time frame, we have a 15. I don't think you wake up and get crazy aggressive into Fed. Be a little patient, keep things small, maybe day trade. If we can get through Fed and nothing's changed, we got the S&Ps above their daily 21. They've got the 15, the perfect score of 15. The Qs are strong. And everything keeps looking kosher over here. I think you got to look for a few longs. All right, now where do we look for a few longs? For the good here in the Big Ten, Broadcom, Google, Tesla, TSM, Apple, and that'd be about it. So take a look here at Broadcom. Broadcom has earnings, I believe, on, I want to say Wednesday, but I want to say a lot of things aren't always true. The 11th. The 11th would be, yeah, I'm wrong. Earnings for Broadcom on Thursday. And putting earnings aside, I would love to jump in here and buy it on the 2-day and the 3-day squeeze. Take a quick look over here, and they would fit the bill. Beautiful 2-day squeeze, great structure, got the green arrow on the indicator. That makes for your A+ setup and a great entry. And what about the 3-day squeeze? Yeah, just as pretty. So if not for earnings, I'd be looking at maybe a 400, 420 call for. With a bigger time frame squeeze, you probably give it time. Could be a January expiration, February, March. But I'm gonna hold off for now, get their earnings, and then maybe find a spot to pick up some Broadcom. And then from that, we can jump over here to Google. Google, of course, has just been an animal. A bit of an animal this year. And right now we have a 15-minute, a 1 hour, and a 2 hour. The thing I want to show you guys here on that 1 hour squeeze, looking down here at momentum, we got the negative shift. That would have been when? That would have been right after Thanksgiving. Momentum crosses to the sell side, and look, Google's very bullish, so they get that negative momentum shift. They don't really break structure, they don't break the trend, they don't take that big squeeze and break it short. But at the same time, you're not getting that kind of, gap it up, pump it, and go, go, go action, which you can usually get on good structure, good trend, and good momentum. So for this week, one potential trade we could look for would be, if we can get the proper trigger, get the MACD shift, get the perfect score of 15, get the green arrow. If they can do all that and you got a good market behind it, short-term thinking, Google might be ready for, if anything, maybe a play back into 325, 330. So Google, I'm going to keep an eye on that for, again, more of a short-term play, bigger picture. Google's a beast. But look, Google could pull back, like 25% lower into its weekly 21, and it'd still look really bullish. From Google, we can jump over here to Tesla, which we've got the 500 calls for January on. And looking back here at the weekly chart, you had the big weekly squeeze back here, big breakout. And then really, September, November, October, into December here, everything a bit choppier, pulls back to weekly 21. Now you're looking at a lot like the QQQ, a lot like the S&Ps, 2-day and a 3-day squeeze. Now Tesla's maybe got to come in a little bit. We'll find out, of course, but 3-day squeeze has at the moment 15 points, the green arrow, great structure. Could be a case of you get a big 3-day squeeze back here. All the energy being built up, big breakout, big push. There's the easy part of the move. And then Tesla's getting a little bit tuckered out, all the back and forth. It's definitely no fun in the short term. What that ugly, choppy back and forth can give you, brand new weekly, daily, 3-day squeezes. So yeah, potentially, Tesla's got a good market behind it. Could be a repeat of big 3-day squeeze, build up all the energy, and then you get the party going. If they can do that, I think through 475, it should be a pretty quick path in the 500. And final one here for the open guys of the morning will be TSM. Good handful of squeezes here, none of which have my buy trigger yet. No trigger, no trade. The one I would love to buy eventually would be either the 2-day or the 3-day. It's kind of the theme right now. Get through the Fed, everything's still bullish, good rankings, good buy signals. Then I'm looking at S&Ps, QQQ, Teslas, etc. Trying to look for a few more of those, bigger size aggressive swings on 2-day and 3-day squeezes. TSM here being no exception, but checking the indicator, we have compression for a potential breakout, we have structure for a breakout, trend for a breakout. we ain't got that momentum. So give it a few weeks here. Wait for a MACD shift. If they can turn that 3-day squeeze into that 3-day squeeze, could make for a good play. But all right, guys, welcome back. Happy Monday. Be patient. Be disciplined. Don't lose your shirt in the Fed. Get through JP, and then the key will be. I was gonna say, can the Bulls keep the progress they made? Here on the dashboard off the ranking system. Better yet, can they keep the progress they've made and potentially build on it? We'll find out what is in store. But all right, guys, happy Monday, and I'll catch you in the rooms. Adios.